Hey mom, how's it going?
I'm having a great day, Lindsay. I'm pretty excited. We get to talk to one of my favorite people today and end the day on a high note. So I'm feeling pretty good. How about you?
I'm feeling pretty good. I get to spend a lot of time with our guest today, Erin, on Riverside, recording some videos and learning about accounting, tax strategy, HR, all these fun things. So I feel like I'm just like living a normal day in the life of Lindsay today.
I know, I know. Well, Aaron, we are super, super excited to have you join us on the podcast. If for those of you that don't know, we're talking about Mr. Aaron Stocks, who is the CEO of PFS Global or AgencyPoint, whichever way you might know them. So, Aaron, welcome to the show.
Thanks for having me. I also, two of my favorite people here. I love hopping on here and talking with you guys, and there's so much chemistry with you too. It's always great hopping on with two great people. So thanks for having me.
Welcome.
I think it's funny by chemistry you're referring to how we just razz each other all the time and make fun of each other. I actually just got asked on LinkedIn today to join someone else's podcast to talk about working with my mom, and that's going to be such a fun time. It's with Charlie Todd, one of our past guests over here on this podcast. It's such a good time working with people that you like and you have fun with.
I'm not going to lie. When I saw Charlie Todd's post, I thought to myself, I don't know how I feel about that. Like, I'm not really sure that we hand Lindsay a mic and talk about what's it like to work with my mom today. Cause, that depends on the day, doesn't it? So, anyway, it's all good,
It does
right?
depend on the day.
I'm going to try not to think about it. Yeah. Try not to think about it.
Super funny.
Nice.
Well, Erin, today I really want to chat about some of the things that Agency Point does. And you guys are interesting because you don't just do the things you do for insurance agencies, you do them across other industries as well. So you have perspective that's outside of the industry that my mom and I are always deep into, and the our listeners are always deep into. So I think you can bring a different perspective to topics like accounting, tax, HR, and legal. I'd love to kind of dive into some differences between each of those areas and what you see outside the industry versus what you see inside the insurance industry. How does that sound?
Sounds awesome. I think if you're in the insurance bubble, you'll you'll be shocked at how different other industries are, right? Just because insurance is so unique. It has such a community of people that are willing to help or not help. But there's just it's very unique in the industry, and so we are about 60, maybe a little bit more than that insurance, and the rest is not. So I do think that I'll have some perspective outside the insurance industry that I find most people in the industry are shocked, like, oh, that is different.
Yeah.
Yeah. From your perspective, what area in that is like, is there any that are kind of blanket relatable to other industries to insurance? Or are they all really different?
There's two that are close that have their differences that are close, and I'd say the rest are very different. So the two that get close to how the accounting of insurance works is you'll have law firms. They have what's called an IOLTA account, which is a trust account. Operates very similarly to an insurance account, but it deals with client money. So instead of having premiums and fiduciary and non-fiduciary funds, instead it's really all client funds that go in that are then worked off as a retainer, right? So that's a very similar industry experience with the trust account. And the other are wealth managers or financial advisors. They really work off similar commission structures. So like they have producers, they just call them financial advisors, right? They get paid a percentage of the commission that's earned. Instead of calling it commission though, it's assets under management or fees that are earned per trade, etc. So similar workforce or sales force in that aspect, except typically they don't have a trust account, although they can. But yeah, those are two relatable industries, and the rest, none of them really relate very well over. So it's hard for people to, relate to them when they're in the insurance space.
Yeah.
You know what's so funny is I always use real estate as an industry that's relatable for insurance, and that is not one of your examples that you mentioned even in the slightest.
Real estate, I guess, could be. I don't like to relate it over because they're all generally independent contractors, and insurance has really made a push over to employees. They all are kind of getting their own business out there pounding the pavement, and some will just be an active real estate agent and do 2 deals a year part time, right? Well, I think if you're going to be a producer in the industry, you're generally an employee, but you don't have to be. A lot of times you're fed leads from your office or whatever, and you're really there to close deals. And the biggest difference is renewals, right? So real estate generally doesn't have renewals.
Yeah.
You might have repeat business, but it's really a different operation. So
Yeah.
like if you're running a successful insurance business, it's going to be way different if you try to go into real estate.
Yeah, that makes
So,
sense.
Aaron, let's talk a little bit about, obviously a lot of the work that we do in this industry is around number one, making sure people understand the value of their business. They understand the transferability of the business in order to either acquire other businesses like theirs or to sell. Right. And so you've successfully grown PFS Global through both organic growth and an acquisition strategy, but you get to see what it looks like on the accounting side, but also what it looks like on the insurance side. Tell me some of the differences between an acquisition of an accounting firm and an acquisition of an independent insurance agency.
Yeah, huge differences. Insurance has some of the most transferability of clients, right? And that's because, you can get an appointment with that carrier. You don't have to roll the book, right? You can just take over as broker of record and the acquisition. Very streamlined process. The insurance industry has really done that well and has really driven up the price and attracted private equity in its transferability, right? Accounting is kind of in its adolescence of private equity coming in and trying to add more value to the accounting industry. So in accounting, there's really not like a AMS that everyone uses, whether it be Epic or AMS 360 or Hawksoft, right? So accountants, some don't have CRMs, some use a number of CRMs, and there's no consensus on which top five to use. So it makes it extremely challenging from an accounting perspective to go in, identify a book of business. There's not like a book of business report we can just run for accounting firms, right? So generally we look at like the last 12 months of revenue, and that's how we're valued at. And so it drives down the values. Like, you guys might get 5, 10 times EBITDA or 2, 3 times revenue, whatever the current stats are. You guys would know better than me. Accounting is like 1 to 1.5 times revenue, or maybe 3, 4, 5 times EBITDA. And we'll get a bunch of people in the comments, saying I've seen them sell for more or less, and that is true. There are outliers, but that's a general rule of thumb. So it's a lot more challenging in accounting. There's not a great blueprint for it, and there's a lot less transferability of the clients.
Yeah. And so I think sometimes just having perspective of what it looks like in another industry, because we feel like the independent insurance agency space is very fragmented. And, you just described something that sounds almost like a paper agency, but it's not. These are sophisticated accounting practices, but their systems are so different. You might as well be dealing with paper in order to transfer from one to the other. The other thing is, talk about a transferability challenge. If you've used the same accountant and that is your person that you were relying upon and you build a relationship, not likely that you're going to stay when that accounting firm changes or goes to someone else versus, and that's the same inside an independent insurance agency. But if an agency's been really good at branching out and growing in different ways and expanding that relationship to the service person, the account manager, the producer, and the owner, but not exclusively the owner, then the value is very different. Tell me what that looked like, because I know you have executed a couple acquisitions in the accounting space. How how has the retention been after an acquisition, and how would you compare it so we can get a little bit of perspective? And what did you do to mitigate that risk, if you will?
Yeah, good questions. So we've done 3 acquisitions over the last 3 years. We decided not to do one this year to reassess what we would be acquiring, right? And so I like to relate in accounting, you're really buying a client list that you get first dibs for a proposal, right? And
Hmm.
so it's not that people want to find a new accountant. It's that when you're buying, especially smaller firms, it was a 1 or 2 man or woman shop, and they were very used to how that person operated. Now, if you're like a solo practitioner accountant and you go buy another solo practitioner accountant, you'll probably have really high retention because you can invest that time and more personal touch into that client base. But if you're going to take over, let's say PFS Global acquires a solo practitioner's book, which we basically did 3 times, it's a real culture shock, right? Going from you had one CPA who answered all your questions to now you have a team that offer, specific items. So we're departmentalized. You go to the tax department for your taxes, bookkeeping for your bookkeeping, etc. So it's a real culture shock there. And you're also CPAs and accountants all alike are really bad at pruning their client tree. So they have clients that they've had for 50 years that have paid $200 to do
Mm,
their 1040, and there's just no money to be made there. And so really we're,
yeah.
as the acquirer, stuck cleaning up that book, and it takes a long time to do that, up to about a year. To mitigate some of that risk, because you will have lower retention when you're acquiring a smaller book into a larger firm, you'll generally have a contingency on the sale, which will be like 10 or 20% of revenue, just like insurance will generally have. So you can generally agree to that, especially on the smaller books of business purchases. But that's a large challenge, is retention. But, yeah, that's what I have to say on that. It's totally different from insurance because, and I'll say this last thing, and I'll stop talking for a bit, is you have a carrier when you're in insurance. So there's a product being offered, right? That's almost standard,
Yeah.
right? Now there's surplus lines and things, but you can offer the same product as this client and it's a little standard, right? You bought that policy. In accounting, every firm has a different product that they're offering. So now you're trying to take product A and merge it into product B that you offer, and there's no standardization there. That's what causes lower retention in general.
Mm,
Yeah,
yeah.
I was involved in a LinkedIn conversation. I don't know how I get dragged into these sometimes, but I was involved in a LinkedIn conversation today by Aaron Gordon. He posed the question of, if you sold your insurance agency and you were a family-run insurance agency, do you need to disclose that you sold? And my comment back was, hey, we did a podcast on this. Go listen to the podcast. And of course he responds like, no, 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 Lindsay, we want your opinion. So I get dragged into commenting on this. And an insurance agency, it's much different than what you're saying, because they still do have that carrier. And my point in my comment that I made was the client should have a better experience with your new firm, right? So they should gain, better communication. They should gain maybe an app that the other agent didn't have. There should be upside for them where they don't necessarily care that the agency sold, other than maybe if it was a mom and pop shop, similar to what you're referring, it was like their best friend down the street and that's why they wrote their insurance with them. They might care and go to a different agency. It's interesting to hear that outside the insurance industry, there really is no option but to tell the client you sold, because the experience is likely completely different.
Yeah, Aaron, it's
It's even
funny. I had an agency in South Carolina that their client was upset. They came in and they're like, I'm hearing rumors that you're going to sell, and I'm really worried about it. And the owner's answer was, well, would you be surprised to hear that we actually sold 4 years ago and nothing had changed for that client? But yet somebody somewhere was talking about that they were at risk of selling, and they thought everything was going to change and nothing changed, So it's just different in accounting. If you're dealing with the owner, everything's going to change. The product could change, the process could change, obviously the people all change, and that just causes retention to take a hit, obviously.
Yeah.
it's even worse in accounting. So a lot of times in insurance, they don't know that they sold, or maybe they provided a letter or something. And so, depending on the state that you're acquiring from, the Board of Accountancy generally requires not only notice to the clients, but also a signed authorization to transfer files over to keep work going, right?
Wow.
So,
Wow.
and then then there will be a cool down period. And I forget the technical term. I should probably look it up for this podcast, but we're getting a little deep. But so up front, you'll need disclosure until like a 90 to 100-day waiting period. So you notified the client and said, if you don't want to go to this firm or you don't want me to transfer files, let me know in writing, and then I won't do it. After 90 or 120 days, then they're going to automatically transfer. But if you have work that's due every month or every week, like for payroll, you have to get signed authorization from the client after closing to continue work. And so not only does the client for sure know, they also have to approve it.
Yeah.
So that's a
Yeah.
challenge.
That's
My
very, very
goodness.
interesting.
Do you
Wow.
know of any of the
So,
other verticals that you work in that requires that, Aaron? Like, is that true in any of the other current verticals?
Yeah, so like really any professional service has similar requirements because there'll be state agencies that require it that, these state agencies sometimes they have their purpose, but they'll really just create a lot of red tape. So like law firms, probably architects will have, some type of similar transferability issues where they require not only disclosure but consent up front. So legal for sure has it, which we do, and accounting. I'm sure that there's others, like doctors, dentists, et cetera, that have similar disclosures.
Wow, that's crazy.
Yeah. So that's always fun. So
so if
like,
an
go ahead, Lindsay. I was just gonna keep going on the same topic. You can move us on.
Well, yeah, like if an HR firm sells, they have to get like signed, because I feel like HR firms have also been selling some to PE in that same, situation as an insurance agency. At least at a previous company that I was with, one of our HR firms sold to a PE based, like large company. So each company that HR company works with has to like sign off and say, yes, you can send my information. And PE's interested in that?
Probably not with HR and payroll.
Okay.
So those
Okay.
have actually much easier transferability than bookkeeping and tax does. And we should like maybe clarify too. So you can buy a bookkeeping practice that does not have a Board of Accountancy registration requirement because they don't have any CPAs that work there or in ownership. And that in theory wouldn't require this disclosure, at least in California, because they're not registered with the California Board of Accountancy. But when you go to basically buy anything with tax or with CPAs involved, that's where it comes in. Now, private equity gets around this requirement to register with the Board of Accountancy by not advertising CPA firms, which means all the CPAs in the firm have to drop CPA on their email signatures or websites, right? You can't advertise as a CPA firm. You can only advertise that you do tax, and then generally they'll change accounting to like bookkeeping, etc. And that kind of skirts away from that transferability issue and disclosure with the California Board of Accountancy. That hasn't been like well established in every state, so there's still challenges, I would say, depending on the state. But that's how private equity is currently getting around it. So once they acquire the book, disclosures go out of a CPA firm that they buy. They don't transfer into a new CPA firm. It'll be a typical LLC versus like a professional corporation or LLP.
That makes so much more sense. Okay. Got it. So when you are working with your clients that are scattered all around, and remind me, what like verticals do you have? Insurance is just one of your verticals, but you have others that you're with. What are those other ones?
So we say we're pretty agnostic. That's only because when we first started, we took on any and all clients. So our book of business has like almost every industry in it. But some main ones would be manufacturing, construction, real estate, logistics, other professional services like lawyers are really big, doctors, dentists, etc. Entertainment, production entities, nonprofits. Those are some of our large like clusters of entities, but we probably worked with most types of industries.
What, okay, got it. When you are working with industries outside of insurance, what are some of the biggest like key areas that are like huge glaring differences from insurance agencies that you work with?
Yeah, that's a good question. So the main difference is that more people will know accounting in these other industries. There's not a lot that know accounting for insurance, which is good for us. But so that is a difference. There's more competition in accounting, but there's a larger need for other professional services to that client. So like tax planning is more complex and becomes a bigger issue. HR in other industries is a much bigger deal than insurance because insurance hasn't been targeted for large suits from employment attorneys yet, right? Payroll is obviously very big outside of it, and legal. So like in insurance, you have your appointments with the carriers; they're pretty standard, right? But if you think about like let's say you're running manufacturing, you got a new supplier, right? You need to review their contract, and so legal becomes very important. As opposed to an insurance, it's really like, do I have a change coming up? Am I buying or selling an agency? Do I need to add or remove a key producer from a key agreement? Like very transactional. When like in manufacturing, it's every day there's some type of legal issue that pops up that you really have to have like of counsel or attorney on retainer.
Yeah, I think of the legal is truly, am I buying or selling, or do I need to review my agreement with my network? Do I need to review my agreements with my vendors for data or cyber or whatever? Or do I need to review my agreements with my carriers? But it typically is triggered by a really big decision, like I'm buying or selling or transitioning ownership. It doesn't happen every day. Like that's for sure. So I also think for that reason, it's hard to find lawyers that understand our industry and are well versed because it's not every day versus maybe in another industry, there's lots of lawyers that get repeat work from like a manufacturing customer. There would be lots of different choices, but at least from my experience, it's difficult to find tax accountants that understand insurance, lawyers that understand insurance, and have many to choose from. So when you're in a busy season, sometimes you're like, man, it's like a 3-month wait for me to get to what I need to do. I mean, I'm exaggerating slightly, but I think that's a great point, Aaron. And maybe one of the reasons why it's hard to find many different options when you're out there looking for a need in our industry. Less competition for you, though.
Absolutely. It's also a difficult. Yeah, that's good. That's definitely good. No, it's a unique industry to understand too. So like it could take, 5 years to really fully run into all the issues in insurance, whether it be
Yeah.
legal, HR, accounting, to be like, oh, I ran into that before. Let me tell you what I need to do to fix it. And so a lot of people will dive in, maybe try it for a year, and they're like, man, this insurance accounting sucks. I'm getting out of it. I'm gonna go do manufacturing or something that's easier.
Yeah. Yeah. So what's the biggest lesson you learned from buying another accounting firm? You said you chose not to do an acquisition this year. What do you think the biggest lesson is that you learned and you're going to take to the next time you would acquire either a legal firm, an accounting firm, or, to grow your business?
Yeah, I used to say that the biggest item you needed upfront to make an acquisition successful was to get along with the seller. And that is still really important, don't get me wrong. But I actually think that what's more important, and so I've maybe eaten a little crow and had to accept our wrongdoings, is that it's actually more important that the clients have a similar mindset to your existing clients. And keep in mind, you don't get to go talk to these clients before you buy them. So how do you figure that out? Well, it's actually around like how the firm operates, and those will be similar clients. So, is that firm taking on any and every client, any and every industry? Are they pricing it all differently for every client, or is it very structured? These industries, this pricing, these packages, it's all very organized and set in one way. And that's what you really have to determine up front. So, if you're running into a small CPA firm again that has clients from 50 years ago, you're going to have a big challenge that needs to reduce price on the purchase, and and that's the biggest issue. So if we're going to go target a firm going forward, which maybe we will or won't do, I'd assume it's in the cards. It needs to be a like-minded firm that's smaller but similarly set up.
Yeah. Yeah. My last question to you is how long from start to finish, since agents, since accounting firms maybe don't have the same systems, how long did it take you from the moment you started the conversation to close the deal? And um, how long did it take you and what's the average is what I would ask.
Yeah, it gets quicker and quicker each time. So like our last one we did in about 90 days. I would say
Wow.
that's, yeah, fast in
Wow.
accounting. Yeah, you probably need like on average around 5 months to close on an accounting deal. You don't have to, but if you want to do it properly with the proper disclosures, so it's like 3 months to close it. So like, let's say you want to close one at the end of the year, you should really start looking, you know, like June, July, August would be like the latest. And
Yeah.
then the hardest part is transitioning all this work into your firm. That takes about a year, which sounds crazy, but you really have to get through
Yeah.
one full tax season to transition them properly. And then after that first year, it's a lot easier once they're there.
The reason I asked you is so many people think, well, I can just do these things really quickly. And the more that I do, the faster it can get and the reality is the same steps have to happen. If you rush the steps, you might miss that the customers are nothing like your customers, or the policies written are nothing like the policies that in our industry. Like if the minimum limits are different, or there could be, just a philosophical difference between how you engage with your customers. Do you accept cash? Do you have everybody on payment plans? Are they all ACH? Are you processing, 1,500 checks a month? Or are you doing that all electronically? I mean, it is unbelievable the little details that matter significantly in how you operate your business and can really bring you to your knees. Rushing the process and forgetting to ask those things or check out
Yeah.
those things can cause it to be a pretty, what looks on paper to be a fantastic deal, not so good deal, and really slow things down and maybe saddle your team with more work than they were bargained for. So, I would definitely say take your time and make sure that cultural fit is there, which is the hardest thing, by the way, to get your arms around.
Hmm.
I mean, you and I, we can look at a spreadsheet and knock out a spreadsheet all day long, but it's not going to be sitting on a spreadsheet. That's the problem, you know?
Yeah.
Spreadsheet acquisitions, they all look amazing, right? But so we actually were going to make an acquisition. We were going to make one last year. It was going to be two last year was the plan. It was out of Las Vegas and good agents, good accounting firm, and we really enjoyed it. But what we do is our tax director here needs to pick some returns to review, right? Just let's make sure we're culturally on the same universe as far as what's allowed for taxes or not, right? And actually, that deal blew up because we were not on the same page about quality of tax returns. So they had a really good accounting side and tax side, but the tax side was just not up to our standards or was too aggressive on some of their tax positions. And you buy a firm like that, even if technically the liability is on the old firm, it's on you if you're going to keep that client because either you got to drop that client
Yeah.
or you got to fix it. And the client doesn't like when you have to fix past mistakes, especially from someone you purchase. So
Absolutely. Yeah. Well, Erin, thank you so much for joining the show today. Really appreciate the insight into other industries. It's something that I think we should start doing more is looking into other industries. We've actually gotten some requests. I actually just saw someone on Apple Podcasts left us a review and they said, I would have given this show 5 stars, but I only gave it 3 because they only talk about insurance and I want to learn about other industries too. So I'm like, fine, I'll give you other industries. Here's a bunch of different industries in a bunch of different areas. So thank you for being our guinea pig and coming on and chatting about that. And also, for anyone listening and didn't hear the ad in the beginning, PFS or Agency Point has sponsored the podcast. So thank you so much for supporting the show and allowing us to try new things. We always appreciate you guys and the friendship we have with you.
awesome. Yeah, I love that you guys are expanding out to other topics if you ever want me to talk about any others. But one thing I'll say, the reason why I love you guys expanding out, because you guys have so much knowledge about insurance, but business principles are business principles. So as you guys expand these out, almost everything you guys have in your knowledge bank is going to apply, just as Carrier related over 90% of what I said to insurance. Like, you guys have the knowledge of every industry already. It's just relating it back to what you guys do. So I'm excited to see what you guys have in store for the next ones.
Thanks, Aaron. I look forward to it, and I'm sure you will be back on to talk about all things accounting, bookkeeping, etc. So, thanks for being our guest.
Awesome. Thanks, guys.
Okay, don't leave. Also, I
We're
just
doing the
got a
thumbnail.
pop up that said something went wrong. That makes me sweat. I'm sweating. But it looks like it's all uploading.
So you were robotic a couple of times, Lindsay. So I'm hoping your recording was okay, but it typically is locally
It will
fine.
be. Yeah.
But anyway,
Sorry
Mine
about
says
that,
99%
awesome.
guys.
Thank you,
uploaded,
Aaron.
so
Normally
I
I
think
would pivot, but
we're looking.
What's that, Aaron?
yeah.
Mine said 99% uploaded, so I think you'll upload fine.
Hey, Aaron, if you
Yeah.
do have some people that are acquiring in other industries that you think would be good guests, I wouldn't mind bringing them on.
Yeah, I got this one client that I would love for you guys to have on. He's a real cool guy. He's a window manufacturer, well spoken.
Yes.
He's expanding into multi-state right now, and so there's like so many legal challenges because they have like contractors licenses and stuff. So when you were talking about like the legal compliance side, like he's a good speaker. I thought he'd be great. But a lot of my clients aren't in insurance. So if you guys want anyone, you just let me know and I can refer them over.
I just think
Absolutely.
an
Aaron, like if
interesting.
you,
So I have go ahead.
I'm sorry.
I
I
have
think
a
I'm
couple.
delayed. I did not mean to talk over you.
That's all right, Lindsay. We have a couple people that are looking to sell their business. And you know what they're doing is reading about people in other industries because they think like the advice is really narrow what they're getting from other agents. So I'd love to talk to people who are growing by acquisition, who have recently sold and moved on to another thing. Like those are great stories to share. And again, it doesn't matter what industry you are. It matters that you closed one chapter and started another. So I'd love if you have some people like that, Aaron. We'd be happy to highlight them.
Yeah, I'll make a note. What were you saying, Lindsay, before I make a note on who I'm thinking?
I was just saying, like, if you guys have anyone that's you just think well spoken and has something they're doing in their, I keep saying agency, but business, right? Like, send them over to us because we could probably talk to a wall. We'd prefer not to talk to a wall. We'd prefer to talk to cool people, but like people that are well spoken, they always have a story. So shoot them over to us. We'd love just to get different perspectives. Mick, I went for a drink with Mick and he convinced me to start expanding the podcast pretty rapidly. So I
You
really
need
need
to
to get my
expand
arms around
Carey
that.
into doing other industries too. Come on, Carey.
No, I don't know about that yet.
Come on, Carey.
Maybe, you never know. It could be 2026. You never know.
What if we do law firms or like one more niche that's like close to insurance?
We could do that. Maybe we'll think. I'm thinking
All
about
right,
it.
let me know. Let me know.
All right.
I feel
Like I
like
said,
Carrie
there's a
needs more
CFO
sleep.
advisory. CFO advisory is a need in every industry, maybe even more so. Well, I don't know about more so than insurance, but there's so many like CFO advisors and they're just trash. You know, they're just people that do CFO advisory because they were told to. But people that actually know the principles, that like it's tough to find. I get inquiries all day.
All righty. Making me sweat now.
All right, I'm gonna send two of my clients over that I think would be cool for the podcast. Well spoken. One of them is got a lot of like M&A experience. You'll love it. And then one of the guy is a window manufacturer expanding. See if you guys like what they have to say and invite them on. You know.
Love it. That's awesome.
Amazing. Thank you. I appreciate
Thanks,
that.
Aaron.
Cool. Thanks, guys. I appreciate you.
Bye.
Bye.